Good afternoon. It's Sean Starks, Centaurus Financial. It is Monday, November 30th, the last day of November, and it shows that this month, no, even though we're down 271 points today, it still proved to be the best 1 month in 33 years. So that's an excellent return for the month. It proved to be very successful for investors who survived a very tumultuous election season, and now we go on to 2021. So anyway, we're down 271 today. It was an assortment of stocks up and down. Some of the airline issues were up. Some of the old favorites were actually up, like General Electric. Some of the tech stocks were back up. Apple made a strong move today. So it'll be interesting going forward what's going to happen toward the end of the year. As I've talked before about the Santa Claus rally, which is a traditional thing that does occur between now and New Year's Day. Related to that is this time of year is always when somebody approaches me and says, "Hey, John, my son or my daughter's just entering the workforce. They finished their school. They're not married or they are married or whatever, but they want to start building an investment portfolio for themselves." And say, "John, how do we get started?" And that is a question like, how do you bake a cake? Well, the bottom line, it all depends on their situation and what they're going for the future. But the bottom line is, I like to sit down and talk with them and say, what are your goals and objectives, and what is your current situation financially? And many people would just say, hopefully say they want to make sure that they have a secure future, and that's what they're trying to build a base for now. So related to that, people say, how do you get started investing if you're not exactly sure what to do? And first off, if you're working in a business or a firm that has a qualified retirement plan, please, by all means, contact the HR department and get into that. And immediately get into the plan. If they match, even if they don't match, get into the plan, take advantage that way. Take advantage of being the dollar cost averaging approach there, the money going in every month out of your paycheck. Number two is if they don't have a plan, then you can set up something of your own. You can set up your own IRA, individual IRA, whether it be a Roth or traditional. And they allow very strong limits to put money in. So that is something strong to consider. So starting your own Roth is something you might want to consider, or your traditional IRA if you don't have a retirement plan in work. Related to that is if you do start your own IRA, you have a choice of what you want to put in it. And that's where the individual selections become very individualized for the person who's making the investments. That means if the person's looking long term, is he looking for short term, is he trying to build a nest egg to maybe buy a house, or what are their objectives? And that's why sitting down and writing down your objectives on a piece of paper or discussing them with your financial advisor and say, hey, this is what I'm trying to achieve right now. I want to either retire at 40, retire at 50, or I want to just have enough nest egg at 25 to 30 to have a house or whatever. So the bottom line is knowing what your objectives are, and that will determine the selection of the investments you may want to put in your portfolio. And from that point there, then you'll decide then if you want to use stocks, mutual funds, or an annuity, or an ETF, or exchange traded fund, or just any other type of investment. So even possibly just a straight commodity type investment like a gold fund. So that all comes into the future, what your objectives are. That's why sitting down and objectively looking at what you want to do, and if not that, then discuss with a financial advisor of some sort to say, hey, here's my goals. Here's what I'm trying to achieve. What should I do? From that being point there, then you can decide if you want to use stocks or mutual funds or whatever. And if you decide to use stocks, it becomes a little bit more difficult for most people because they have a regular job, they have a life, and they don't have time to study the 11,000 stocks that are on the various exchanges that we utilize. So New York Stock Exchange and NASDAQ and that. So the bottom line is, then if they want to use individual stocks, then if they want to do their own research, then that's fine. I always say that most people spend more time researching their refrigerator that they're about to buy than the average stock they purchase. And that's because they basically don't have the time or the inclination to study it all, or maybe doing all the background work. But bottom line is, before you make a purchase of individual stocks, you may want to do a little bit of background on the company you're investing in and see if it meets your objective and look at what the long-term objective is of that company. Are they looking for long-term growth? Are they looking for preservation of capital today, or is the board of directors looking to build a company and acquire other companies? So you have to look at what the company's trying to do. And I always tell people the best thing to do if you get started, if you're going to be buying stocks, is maybe just go to the list, are listed every day in Wall Street Journal and various investment periodicals, and see who lists the new highs every day. New highs in the market every day. They list new stocks and new highs. If a company keeps making new highs, must be a reason why other people are acquiring it. It's kind of a good. It's not foolproof, but it's kind of a good thing to get started on. Maybe what's companies are seem to be in the eyes of investors. Number two is find out the categories you want to invest in. Find out the groups that do invest, whether it's energy, whether it's financials, whether it's construction, real estate, whether it's infrastructure. I mean, automobiles, transportation. Maybe we want to look at the groups, see if the groups are in favor, and then see if those stocks and those groups are in favor. And maybe at that point there, then if you like a certain group that's doing well, you may want to then pinpoint maybe individual companies within that group that may be successful for you. Again, it's all a matter of doing some research, and if you don't want to do the research, then you might want to go back to buying an ETF or a mutual fund, or sit down with your financial advisor of some sort and discuss, hey, what should I do for myself? And that's something that you need to take special care to make sure that you're looking at your objectives and the investments you make are kind of geared to what you're shooting for and your goals are. So I must recommend that. Tomorrow's the December 1st. We start the last month of the fourth quarter. Be very interested to see how the market goes this month, but pay close attention to volatility. As I mentioned last week, tax loss selling will start at this point in the next few weeks. And also we'll see the possibility Santa Claus rally and some of the more active stocks by the various mutual funds. Again, Sean Starks, St. Financial. I look forward to seeing everybody tomorrow.